Can you explain the tax differences for an LLC owner versus a C-Corp owner?
Yeah, I think that's a great question to just kind of set up a conceptual framework for kind of the rest of the conversation, because especially when we're talking to customers, people come to us and they'll say, okay, well, what do I owe in taxes? Like, how do I file, et cetera? And it's like, okay, back up. The first thing you need to know, or the first thing we need to know if we're going to help you, is what type of company do you own? Because that has a lot of implications downstream. So I think that, I'll talk about like LLCs first, and then I'll talk a little bit about C-Corps and how they're different. So the way that an LLC is going to be taxed is dependent on whether or not the foreign owner of the U.S. business has U.S. sourced income. There are lots of guides. I would advise you to even look up the IRS guidelines if you have more questions about this, because they provide some structure on, what is considered U.S. sourced income and what isn't. But that's the first question you're going to have to ask yourself if you have an LLC, because if you have an LLC that has U.S. sourced income, you're going to have to pay taxes according to the regular income schedules in the U.S. But if you don't have U.S. sourced income, you can either apply for a treaty exemption, or you can file a 5472 with a pro forma 1120 to potentially not have a U.S. Income tax obligation and rather pay income taxes where you work and live, which is really common for owners of US LLCs. And the reason for that is that, US LLCs are what's called a pass-through entity. So the income that is made through the LLC, or perhaps even the profits rather, are passed through to the owner. There isn't a legal structure in itself with the LLC that, retains the earnings and then has to have them dished out accordingly. So with an LLC, like for example, if I owned an LLC as a US citizen, and let's say we made, $200,000 in revenue and had $100,000 of expenses, which would be great. That would mean that I have $100,000 of personal income for myself. And as a US citizen, right, and somebody who lives in the US, I would just report that on my personal taxes. And there's no business taxes. There's no, corporate forms that I'm going to fill out. I'm just going to say, hey, my LLC, I own it. It made $100,000 in profit. So I'm just going to report that on my personal taxes. So it works a little differently, but also in some ways similarly legally for foreign owners of US businesses, where if you make that $100,000, you have to determine if it's US sourced or if potentially you may just owe taxes on it in your home country, which is something I'm sure we'll get into. But a few of those things right off the top are: number one, those questions, do you live in the US? That's a big one if you have US sourced income. Number two is, do you have an office space in the US? And that doesn't mean like an address for your business, because every business has an address where they can at least receive mail. We're talking about a physical office. And the third is whether or not you have full-time W-2 US employees. So not like you have a contractor that you paid one time, or somebody that, maybe you work with from time to time, or that helps you out from the US, but a full-time employee. If you don't have any of those things, there are a couple other small things, like, for example, if you own real estate or you're issued certain types of dividends, some extremely rare circumstances. But in general, if you don't have any of those, none of those apply to you, then you may not have US sourced income. And as a result, the income is just going to flow through to you personally, and you'll pay taxes in your home country, right? Now, that's a lot different from a C corporation, because a C corporation is its own legal structure. And that means that it retains its own earnings. So the C Corp itself has to pay taxes. So it doesn't matter if the income's US source or sourced from somewhere else, because the C Corp itself incurs a tax obligation. You have to pay 21% of the profits. Now, one thing that you can do is you can make yourself, as the owner, an employee of your own C Corp to mark your salary as an expense, which you can't do for an LLC, but that creates all sorts of other payroll tax liabilities. At the highest level, an LLC is typically going to be simple and less expensive to manage than a C Corp for a foreign owner. But C Corps have some other specific advantages, like, being advantageous for venture capital and stuff like that. So that's a lot to put in place, I think, at the top, but it's just really important context, because if you don't understand the difference between an LLC and a C Corp, you're always going to be lost when it comes to whether or not you owe taxes and whether to file, because the criteria are just totally different. I hope that's a little bit of a reasonable breakdown that we can use as a jumping off point.